I'm Ruth Goodwin-Groen, the Managing Director of the Better Than Cash Alliance. We're based in New York, and we know from your registrations that we have participants joining us from every region of the world. And so we're delighted and so glad that you can make the time in your schedule for us. I'm going to begin by introducing our panel in speaking order. First, the lead author of our study, James Hoken. He's speaking on behalf of Bangko Frontier Associates and has almost 30 years of international experience in financial inclusion. Jim, as I know him, is joining us from Nairobi, where he is currently the Director of Learning Management at Mercy Corps' AgriFin Accelerate program that, you won't be surprised to hear, is promoting digital financial services to smallholder farmers. Good afternoon in Nairobi, Jim.
Good afternoon, and thank you very much, Ruth.
Great. Next, I'd like to introduce Newstor Espenilla, whom we are delighted to have with us. He is the Deputy Governor at Bangko, Sentral and Philipinas, otherwise known as the Philippine Central Bank. Newstor heads the supervision and examination sector there. He also chairs the Basel Consultative Group workstream on financial inclusion and represents the BSP at the G20 Global Partnership for Financial Inclusion. We're particularly delighted to have Newstor because Philippines is a founding member of the Better Than Cash Alliance, and Newstor has been involved with us right from the beginning and is currently one of our senior advisors. Welcome from Manila, Newstor.
Good evening, Ruth. Thank you for the introduction.
And last but not least, our private sector panelist, Mr. John Carey-Ong, who is Head of Treasury and Trade Solutions at Citi Philippines. John has almost 2 decades of experience in financial services, ranging from fixed income brokerage, treasury systems, treasury operations, cash management, and trade finance. John, welcome, and hello to you in Manila as well.
Hello, and good morning.
Now to our agenda, and those of you who've been part of the Better Than Cash Alliance webinars, you know that we keep to our agenda and timing very strictly. To begin with, Jim will take us through the key findings of this research, leaving money on the table, and then we'll turn to the Deputy Governor, who will explain BSP's planning for promoting digital payments in the Philippines. We'll get back to Jim for the lessons learned, and right afterwards, John will share with us the successful government initiatives in which Citi has been involved on digitizing payments, as well as the challenges from a banker's perspective. And then finally, we will leave time at the end for your questions. And as Angela noted, you can submit your questions anytime in the chat box on the right side of your screen. If you want to take a moment to look at it now and see if it works, that's great. So we'll look forward to hearing from you during the webinar. Please note that those questions coming in will only come to us as organizers. They're not for everybody. And by way of introduction, as we get started, for those of you who don't know us, the Better Than Cash Alliance is a partnership of governments and private sector and development organizations who are all committed to moving away from cash to some form of digital payments. We're agnostic as to what kind, but we're all committed to it. And we do 3 things. We advocate for the transition from cash to digital payments. We catalyze the development of inclusive digital payments ecosystems in our member countries because we care about this to reduce costs, to increase transparency, to advance financial inclusion, particularly for women, and to drive inclusive growth. And thirdly, we conduct research and share the experiences of our members, and that is what we're doing today. So we're presenting this new case study on the business community in the Philippines. And by way of context, I want to just give you 3 key facts that will help you understand why this case study is so interesting for not just for the Philippines, but for the Alliance more broadly. You know from the Findex that about 1/3 of Filipinos hold a bank account, and that means that there's a huge opportunity for growth of electronic payments to drive financial inclusion. There's a big market out there. Secondly, we're delighted to have found that the government has taken a great lead in promoting digital payments. Over 60% of government payments are now electronic, so that is a very significant factor in the movement in the Philippines. But if you look at all the payments, the number of payments, only 1% are currently electronic because and you can see on the screen we've used the acronym B2B and P2B payments are mainly in cash or checks. That means the business-to-business payments and the person-to-business payments are largely in cash or checks. And so we're going to be talking about that today, and you can see why it's such a major issue to address in our case study. So, Jim, why don't you start us off by telling us why businesses are leaving money on the table?
Thank you, Ruth. And yes, there's a big opportunity here, and I'm glad that you noted that. It is important to note that checks remain the dominant payment method for big businesses and many small and medium enterprises, and some micro businesses also in the Philippines. The reason adoption of electronic payments are limited is largely because, one, the apparent cost of electronic payments. A lack of transparency is reported on the high and unpredictable fees charged for interbank digital payments. Bundling and aggregate fees make it difficult to isolate and predict digital payment costs. Also, instead of using interbank digital transfers, corporates often require suppliers to open accounts at buyers' preferred banks. As a result, suppliers commonly open multiple bank accounts with different banks, creating a significant inefficiency and administrative duplication, costs that businesses are loath to take on. Also, banks usually do not charge a fee for issuing checks, provided the business maintains a high minimum balance in return for no-fee checking services. So checks appear cheaper than they really are. Second, lack of incentives for electronic payments. Checks are accepted as confirmation of tax payments, particularly that, whereas e-payment records are not always accepted unless accompanied by paper rather than electronic invoices and receipts. It discourages the use of electronic payments. Any check issued by any bank can be deposited at any other bank, usually clearing within 2 to 3 days, providing proof of payment and transactional information that helps businesses to reconcile their accounts. In addition, interbank digital payments receipts in the Philippines frequently do not provide enough information about the transaction to allow businesses to adequately reconcile their accounts. 3, there are challenges with the ACH. The Philippines has an automated clearinghouse equivalent in the electronic peso clearing system to support interbank transfers. However, the pricing rules and procedures are not as clear as they should be. Only 1.7 million transactions annually occur on the EPCS, equal to only 1% of the volume of checks cleared. There is a clear need to create better incentives to encourage greater use of better managed and clearer ACHs, including tax reforms to recognize electronic invoices and electronic receipts as evidence of payment, and clear rules around permissible charges, fees, and the timeliness of credits.
Wow, there's some big challenges to address there, Jim. And so there clearly needs to be some unpacking of the costs for businesses, which is what your team actually did with some businesses. So can you tell us what your key findings were when you started looking at those costs? And maybe I should give you a drum roll or something like that.
Well, for this case study, we modeled potential cost savings for businesses and found that the transition to digital would save approximately 46% of their current invoice handling costs, mostly from reducing time spent by staff processing checks, and that time could be deployed in better parts of the business and other parts of the business. And 2, the banking sector, digital interbank, what I call cross payments, could boost net profit by approximately 8.5% through the use and collection of low-cost fees rather than relying solely on float income. As of 2014, the high proportion of unbanked small businesses in the Philippines translates to very low levels of digital payments. In our study, we found that 1% of small business payments are digital. Even small businesses that our bank operate in an environment dominated clearly by cash. 82% of small businesses reported that their customers prefer cash or prefer to pay in cash.
I think that really did deserve a drum roll, Jim, because that means almost half of current invoice handling costs could be reduced by businesses, and banks, I mean, almost 10% of their net profit increase is really significant. So I know that lots of our friends on the webinar are interested in the details of this. So perhaps you could take us through the 3 case studies that you examined in more detail.
Well, we found that many businesses devise very complex arrangements that meet their day-to-day needs without necessarily considering the potential costs. This case study sets out the payment experiences of 3 medium to large size businesses using data collected from them in 2014. The companies profiled here represent 3 distinct sectors of the retail industry. Their experiences highlight the key obstacles to digitizing payments in the Philippines, as well as areas of progress and opportunity. First, Avon, which relies on checks in the absence of convenient and affordable interbank transfers. They make direct sales of cosmetics to consumers, and they have an annual revenue of $375 million. Avon holds 28 corporate bank accounts to make and receive cash payments from 800,000 direct sales representatives.
Wait, Jim, just 1 minute. 28 corporate bank accounts. That's a big number. I remember when we were doing the Mexico case study and webinar, we were talking about Treasury single accounts and how to be more efficient in the process of digitizing payments. 28 seems a really big number.
That's right, Ruth, and it's not unusual. This is why I wanted to highlight this point. Even more, Avon actually pays all suppliers by checks, writing about 1,000 checks manually each month, which suppliers must collect in person in exchange for their paper receipts. This process alone requires 3 clerks just to write and process the checks. Avon does not use interbank digital transfers due to high fees levied and administrative inconvenience. Moreover, Avon noted from its experience in other Southeast Asian countries, having access to affordable and reliable interbank transfers would deliver huge savings in administrative work, as well as time spent on the road making withdrawals and deposits physically in the branches, while online is more comfortable, quicker, and safe. That last sentence is a quote from the CFO. The second case that we looked at was the generics pharmacy, which maintains multiple bank accounts to avoid unclear interbank transfer fees. Generics owns multiple franchisees in the Philippines. The franchisee we interviewed for this case study generates over $2.5 million in annual revenue through 21 outlets. It pays most of its 100 employees by interbank digital transfer, but makes all other payments by check. To avoid the high fees involved with interbank transfers into one central account, the franchisee makes payments by check out of each separate account. The franchisee would prefer to maintain a lower balance in each account so as to deploy scarce capital more productively. However, all the accounts have high minimum balances. So generics is a classic example of the challenges highlighted at the beginning. High fees for interbank transfers and difficulty for reconciliation with paper records. The third and final case that we looked at was Global Restaurant Concepts, which enjoys making digital payments to employees, but meets resistance from its suppliers. GRC uses interbank digital facility to make payroll to nearly all its 800 employees' ATM accounts. Switching salary payments from check to interbank transfers has saved almost 4 days of processing time every month. However, GRC pays bills and suppliers entirely by check through at least 100 monthly bill payments and 1,000 monthly supplier payments. It pays most taxes by check, delivered manually to local or national government offices. The owners, who are sophisticated and are very much used to electronic international payments, estimate that interbank digital transfers would save the company time, reduce costs, and streamline its accounting department from 30 people to 12 people, and deploy those employees in other areas of the business.
Jim, that is some serious number crunching you've done there with those businesses. It's fascinating. And those of you who want more detail, the long version of the case study is going live on our website as we speak. So if you want to go into the details there, but you can see that this is the headline findings that Jim had were based on some very detailed analysis of these businesses. So also, if people from Avon Generics and Global Restaurants are joining our webinar today, thank you for participating in this study. Jim, you've also worked closely with the regulators in the Philippines, so I'm going to ask Deputy Governor Espenilla now to share with us some of the action that's already taking place to address some of the challenges that the businesses are facing. Deputy Governor?
Well, thank you, Ruth. The BTCA case study is actually quite timely, as the Philippines just launched last week its National Strategy for Financial Inclusion, or what we call the NSFI. We are working very hard on the National Retail Payment System, or NRPS project, which is really a critical initiative within the NSFI, precisely to address the situation that Jim has so clearly documented. Our vision is an interoperable system that makes the transfer of retail value from any account to any account affordable, efficient, and secure, one that is trusted by users and participants. With the right arrangements and agreements, we believe this can catalyze migration to electronic payments that can lead to 4 key results. Number 1, lower transaction costs and business operational costs. We just learned from the cases the potentially significant decreases in cost that can be achieved. Number 2, expansion of the reach to unserved and underserved markets. This could be quite significant in the Philippines, where basic savings accounts are reaching only 31% of the adult population, according to the World Bank Global Findex study, and where in our archipelago of 7,100 islands, 64% of cities and municipalities do not even have banks. Number 3, development of new and specialized business models. And number 4, positive network effects that enhance the value proposition and use cases for individuals to be on the network. We note that the current levels of electronic payments in the country really deprives individuals, businesses, and the government of all of these potential benefits, Ruth.
Néstor, thank you. And just to recap then, what you're going for are, an amazing set of 4 results: lower transaction costs, expansion of reach to underserved, new business models, and positive network effects. So that's a great vision. So what are you going to do to get there?
Good question, Ruth. Well, to address the situation and to realize our vision, the BSP is working hard to establish, as I mentioned, the National Retail Payment System. Together with the industry, and we are closely partnering with them, we want to ensure that we get the fundamentals right in the NRPS. This means the governance, the industry agreements, and the regulatory framework. The key players need to know the areas where cooperation is needed, as well as the space for healthy competition. And at the core of this work is the creation of a national clearing mechanism that will make channels effectively interoperable.
Just hold on 1 minute there. Do you want to just explain briefly what you mean by interoperable, Néstor, for those of our listeners who are not so familiar?
Yeah, yes, Ruth. By interoperable, it means you can receive payments from any account to any other account, whether it is a bank account or a digital wallet account.
Oh, great. Okay, sorry. Thank you for explaining.
Yes, we're also working on a Payment System Act to further strengthen the supervisory and regulatory framework. We believe that this will ensure that the system is safe, efficient, and provides a conducive environment to growth in the economy. And we will work with stakeholders so they can see the undertaking in a holistic manner as something that can enlarge and create new markets, as well as lead to cost reduction and efficiency gains. And given the scale of this project, we see that this undertaking will require a lot of perseverance. We are ready to build it brick by brick if necessary. Nonetheless, we hope to see the critical foundation of the national retail payment system at least established in 2 years.
2 years. So you're building the foundation over the next 2 years for an inclusive digital payments ecosystem. So it's going to be a very exciting time for you in the Philippines there, and we look forward to working with you here at the Alliance. So wish you every success in that. Jim, you have summarized the lessons learned from your case study. So can you share with those with us now?
Yes, thanks, Ruth. This case study presents several lessons to help governments, regulators, businesses transition to greater use of digital payments. The first lesson is try to align banks' interests with those of businesses and the government's vision. The Philippines government has shown clear leadership in digital payments by itself, becoming the largest digital payer in the country. It now has an opportunity to build on this progress with policies that encourage banks to adopt practices that will cut the cost of digital payments for businesses, or at least make fees more transparent and payments more convenient. This may require new incentives or even penalties on check volumes or cash withdrawals, drawing on effective reforms in other countries. The second lesson learned is to aim for an immediate step via auto check payments. Businesses could realize large cost savings by switching to automated check processing, cutting overall checking costs by up to 41% simply by eliminating manual checks. And there has been some progress in this area. 3, encourage businesses to explore lower cost payment services. As the experience from the generics pharmacy shows, businesses, especially small and medium-sized businesses, could benefit in the short term from measuring the potential savings of shifting from check to digital payment transfers. Medium and large businesses, in particular, will be better equipped to negotiate with banks and find more cost-effective methods of payment. 4, assess whether rules and regulations for consumer credit and debit digital payments are needed. To increase consumer and SME adoption of digital payments, the fees on these transactions across banks must be examined closely and made predictable. Rules and procedures for an ACH or related debits, for example, especially require study and implementation. 5, encourage banks to market digital payments to small and medium enterprises. Helping SMEs to better understand the labor efficiencies and cost savings of digital payments will be a critical next step for the Philippines, provided this is accompanied by policy and product changes that make digital payments from any bank account to any other bank or electronic account better value for SMEs relative to the many paper-based payment methods currently available.
So that's a great segue. Your challenge to the banks to market digital payments to SMEs is a great segue to John, who's our banker on the panelist today. John, would you share your perspective with us?
Thank you, Ruth, and congratulations to BTCA and Jim on this important study on digital payments. I'd like to share some of my thoughts on this topic. First, I'd like to echo Jim and Deputy Governor's comments that progress on digitizing government-to-person payments has been nothing short of spectacular. City has been in a number of initiatives in digitizing payments, and now 3 of them. Number 1, in the last 2 years, city has issued over 1.2 million cards to members of the Home Development Mutual Fund, or more popularly Pag-ibig, for most loan disbursements, which were previously disbursed via checks. Number two, City has a similar program for the Social Security system, with an initiative covering head office and 2 of their large branches. The Social Security system has now decided to move forward and to roll out to the next 10 largest branches. And under the leadership of the Department of Budget and Management, in particular under Secretary, City was able to pilot the cashless purchase card system for the Armed Forces of the Philippines. Allow me 2 other successful initiatives of the Department of Budget and Management under the of Secretary Butchabad and Undersecretary Mo. One is on the establishment of a national payroll system for all government employees. And number 2, the expanded direct payment scheme, where suppliers of the government can now through direct credit to their bank accounts instead of via checks. Now, when it comes to business-to-person payments, there is progress, but mainly limited to payroll disbursements and are on us, where the debit and credit accounts are with the same bank. Although payroll are a factor in increasing financial inclusion, these payroll are typically sponsored by the employer, which means that as employees are terminating employment, they typically have to close their payroll. In short, financial inclusion, to some extent, is tied to employment. As people become unemployed, they also become unbanked. As for business-to-business payments, by my estimate, roughly over 9% of domestic corporate payments are still done via checks. Does this mean there is a resistance by corporates to electronic payments? No, because for cross-border payments, whether trade-related or not, corporations are 100% electronic, as they will pay via wire transfers.
Thank you so much, John, for that perspective, and it's great to hear the progress on the G2P work that City is doing with the government, but also more generally on the progress on the B2P. But there's still a long way to go. So why are some corporations refusing to digitize domestic payments? And I just want to note one thing, John, is that sometimes your line goes in and out. So if you could speak a little more slowly, then everyone will get what the points that you're making.
Sure, will do, Ruth. Now, there are 2 main reasons. Number 1 is that although the ACH is available, and Jim mentioned this earlier as being the electronic peso clearing system, the outward fees, which is paid by the payer, and the inward fees, which is absorbed by the beneficiary, is much higher. There are on timing.
Okay, John, we just missed that. It was much higher compared to the checks, right?
That's right. It's much higher compared to checks. There are on timing and finance, as well as returns. In addition, for most of the large banks, internally, the ACH system is being managed by their, which is made.
John, just one thing. It's not getting any better. That coming in and out. I was hoping it would resolve itself. So what I'm going to do is, since I've got your notes, I'm just going to cover for you. If you could log off and on again, I mean, with your voice, then we can make sure we come back to you. But I'm just going to summarize your notes here and look forward to having you back with us in a couple of minutes.
Sure.
No worries, these things happen. So what you were saying, to pick up there, most of the large domestic banks, for most of the large domestic banks, the ACH system is managed by their remittance unit, not their cash management or transaction banking unit. And so they don't even offer this channel for their corporate clients. And the second reason, as you can see on the screen here, is the tax issue. The tax authority does not distinguish between payments via check, whether it's a cash or via check, cash or electronic, but it does require corporations to secure a paper document called the official receipt or sales invoice from their supplier. So if any one of the data points required by the official receipt is in error, then the expense is disqualified by the tax office. So if anyone is going to ensure proper tax compliance, then they've got to make sure they've got all the paper compliance at the various data points. So that's quite a challenge, and so the incentives are for the paper checks rather than the electronic option. So we'll get back to those issues, John. I'm sure there'll be questions for you in our Q&A session. So there have been questions coming in. So while the team here consolidates those questions, I'm going to give you a quick snapshot of one of our key alliance partners in the Philippines that is working on, here it goes, the e-peso project that is happening in the Philippines. So our friends at USAID, that's another alliance partner, has just started their largest global project on shifting from cash to digital. In the next 5 years, they're going to be making a big contribution to address some of the challenges we've highlighted today, and will be mobilizing private sector, engaging a range of stakeholders to do these 4 points that you can see on the screen here: drive transaction volumes of large payment streams, promote the retail and industry level infrastructure, improve the enabling environment, as well as address gaps in the broader e-payments ecosystem. Our friend John Owens is running that in the Philippines and has a great team there, and so we look forward to documenting their lessons over the next 5 years as they work with our friends at the Central Bank in their foundational work over the next 2 years. And we'll look forward to be able to sharing those lessons with you in perhaps another webinar before too long. So now there are, to get to the questions. So Nestor, let me start with you. We have a financial inclusion question. We knew that we would get one of those, right? So financial inclusion is, you discussed as one of the objectives. So how does this digitization effort with the National Retail Payment System fit with your new national strategy for financial inclusion?
All right, well, thanks for the question. Well, digitization of payments is really a key pillar of the National Strategy for Financial Inclusion that we have just adopted. We believe that digitalization will facilitate access and convenience to the use of financial services by enabling innovative delivery channels like mobile. This is especially useful given our very challenging geography and also the deficiencies in infrastructure that we're having to deal with. And we aim to promote interoperability in technology-based solutions, taking into account the applicable standards and international good practices. This will support, in our view, an inclusive and efficient retail payment system that will catalyze the use of electronic payments, whether person to person, person to business, and person to government.
Great. So they're working hand in hand. So that's great news. And you mentioned mobile, and let's go to the mobile money question. Jim, we've all heard about mobile money in the Philippines, whether it's in the emergencies with our friend and partner Mercy Corps. Maybe that came from Mercy Corps, the mobile question. So where does the mobile story fit into the picture that you've drawn about electronic payments in the Philippines?
Well, mobile money has been a big issue in the Philippines, and I think that there has been some considerable progress around interconnectivity amongst the mobile money people there, along with BPI Globe Bangko. But I think the the Deputy Governor put his finger on it, which was without greater interoperability, without the ability to move money from one kind of account, no matter what kind of account it is, to another account across banks and across um, mobile network operator mobile money schemes, then there will be real problems in improving the usage of mobile money. But I really want to congratulate the central bank for really tackling this really big and very important question of bringing an efficient and effective retail national retail payment system to the Philippines, and wish him the best of luck on that.
Nestor, do you want to comment a little more on the mobile money question?
Yes, Ruth, thank you. Actually, mobile money really presents an enormous opportunity for convenient retail electronic payments in the Philippines. And it's both an opportunity but also a frustration because over 100%, we have over 100% SIM penetration. And this is actually one of the reasons why the BSP crafted our regulatory framework for e-money way back in 2009. This is actually one of the earliest among regulators, 5 years after observing and engaging the first rollout of e-money in the country. And this regulatory environment has enabled the sustained increase in the use of e-money. Actually, today we have around 10 million registered mobile money accounts. However, the usage still leaves some room for improvement. And more recently, we did a national baseline survey on financial inclusion, and it showed that only 2.4% of adults cited mobile money as the method used to send money, and 1.8% of adults to receive money. And the most common actually in the Philippines right now are pawn shops. In terms of awareness, only 26% of bank account holders are aware that they can perform transactions using a mobile phone. And there are a variety of reasons why the levels are such. And we strongly believe that the NRPS project can address some of the key infrastructural issues and issues related to the business case for the players.
Wow, those are really interesting numbers and show that there is a room for improvement, as you said. But if you've got over 100% SIM penetration, then there is a real opportunity there. So thank you, Nestor. John, we're going to give you a go, see if your sound has improved. So there's a question in here that you had noted that both businesses and banks were resisting digital payments, and on the slide you had 2 challenges. So can you summarize for us what you think is the action needed?
Hi, Ruth.
So we can hear you, so go for your life.
Okay. So one thing that needs to be done is for there. So we do.
Oh, I'm so sorry, John. It's not getting any better. Could you type into the chat screen and I'll read it. I'll read it for you. So we'll just Jim, would you like to take a crack at this? What do you think the action is needed, and then I'll come to you, Nestor, in terms of the action needed this month. What's happening right now? Jim, do you want to take that first, and then I'll read what John has to say.
Well, I think that working with the business community would be very, very important, simply because there are so many payments that are taking place from business to business and people to business and business to their customers, and their suppliers. And I think that working with the business community would make a lot of sense. And as time goes on, as we know, there's a large informal sector also in the Philippines, and that whole group, which is a very significant part of the economy, is not banked, and they're not making payments, certainly not digitally, although they all have cell phones. And I think that promoting business-to-business payments with using the cell, for example, but also other digital payment forms as well and methods, I think it is the way to go. I really think that the business community has a lot to say and is relatively well organized. And I think that particularly the small and medium enterprises would be great allies with the government to try to promote digital payments.
Great. John, thank you for writing to us. And Nestor, I'm going to ask you to comment on this. John says tax reform in terms of the documentary requirement, as he had noted earlier, the documentary requirement is a real challenge for our banks and businesses. And to encourage the use of the ACH by having clear rules on charges and returns. Nestor, could you comment on those 2 points?
Yes, Ruth, I think those 2 points basically highlight the complexity of this endeavor. But I think the main approach that we are taking here is to rally all of the key players, the stakeholders, and that includes the government, the banks, the payment systems provider, to recognize that this is a win-win, potential win-win situation for all of us. But the main initiative that we should be focusing on to get this going is really to get the governance right. Because if we do not get the governance right, then the areas for cooperation will not be very clear, and what we will have is the continuation of what has been characterized by Jim in the study as a low-level equilibrium. Things are working, but except that they're working in a very inefficient manner, and that can be resolved by undertaking a whole range of initiatives, and everyone is involved.
Great, thank you. Rallying the stakeholders, that sounds like a real cry to bring everyone together to address some of these challenges, as you are doing in both your financial inclusion and your national retail payment strategy. So at this point, I'm going to say thank you so much to Deputy Governor Espenilla, Jim Hokins, and John Ong. Sorry about the sound challenges there. Thank you for sharing your expertise with us today on the webinar, and to say that the details, there's a highlights version of the case study and a longer version of the case study, as well as the diagnostic that we referred to earlier on our website. So please do go and read more detail. Sorry we didn't get to all the questions that came in, but we'll be able to address those as we'll send them all to the speakers, and if you want your email, if you want us to email you, please do let us know. You can follow us on Twitter, as you can see here, and on LinkedIn, and you can sign up for our newsletter, and we'll be sending you a follow-up email with a survey about what other webinars you would like, as well as any feedback. And we look forward to sharing with you more case studies and experiences from our members, and want to thank you all again for joining us today. Thank you so much.